Hey there, fellow investors, Wall Street Warrior here, and welcome back to the channel. Today, we're taking a quick look at penny stocks. So, you want to know if you can make a fortune off penny stocks, right? That's why you're here, and that's why you clicked on the video. But first things first, let's briefly talk. What are penny stocks? Why are they attractive? And then finally, we'll be taking a look at the risks and challenges, or pros and cons of penny stocks. So first things first, let's get this out of the way. What are penny stocks? Penny stocks are low price speculative stocks, typically trading for $5 or less per share. They're often associated with small, relatively unknown companies and are considered a high risk investment. High risk, high reward. Why are they attractive? Investors are often attracted to penny stocks for a few reasons. Low entry cost, they're very cheap to buy, which makes them accessible to investors with limited capital, and you can buy a lot of them for very cheap. Obviously, stocks are always a percentage gain or loss, so if you're buying something that's, say, 5p a share and it goes up by 5p, it's 100% gain. Whereas if you buy something that's $200 a share and it goes up by 5p, nobody would even notice, right? So low entry cost. And that leads me on to my next point, which is potential for high returns. So because of their low price, like I say, penny stocks have the potential for significant price swings because stocks are, of course, percentage-based gains. And investors hope to profit from these fluctuations. Also, speculation. Some investors are drawn to penny stocks in the hope of discovering the next big thing, the next big company before it comes well known, which of course can lead to substantial gains. Imagine if you were the guy buying up loads of Apple shares back in the day before anyone had really heard of Apple. There's dozens, if not hundreds, of examples of companies like this who nowadays, of course, everyone knows about them, but at one point they were unheard of and their stocks were incredibly cheap. So speculation, looking for that next big thing. Most of these penny stocks are going nowhere fast. That's the reality. But some of them will pop. If you're lucky enough to find the next Apple, then you're going to be very wealthy off it. Just remember how rare that is. So while these stocks do have huge upside potential, they're usually a waste of money. The risks and challenges. Penny stocks come with a high level of risk and some significant challenges. Firstly, the volatility. Penny stocks are highly volatile and can experience rapid price changes, both up and down, or up then down, then up, then up, then up, then down again. Lack of information. These companies often have limited public information available, making it challenging to assess their financial health and their prospects. Another aspect of this is that analysts aren't necessarily working on them. If you look at any stock in the S&P 500, there's going to be a laundry list of analysts regularly checking the health of them companies, checking their quarterly reports and publishing data, and they're going to make calls on it. They're going to say, is it a buy, is it a hold, is it a sell, is it a strong buy? But a lot of these penny stocks no one's ever heard of, including these analysts. And analysts are often busy looking at blue chip stocks, big stocks. They've not heard of a lot of these stocks. Of course, they're not going to give them the time of day. So getting the information on whether they're a good buy or not, that in itself can be difficult. Lack of liquidity. Penny stocks can be illiquid, meaning there may not be many buyers or sellers, which makes it difficult to buy or sell shares without affecting the price. Also, they're open to fraud and manipulation due to their low price and lack of regulatory oversight in some cases. Penny stocks are susceptible to scams and market manipulation. So now we've talked about what they are, why are they attractive, and covered some of the risks and challenges. Let's talk now about how to approach penny stocks. Hey G, you want to buy some penny stocks? If you do decide to invest in penny stocks, consider these strategies. First of all, do your research. Do thorough research on the company, its financials, management team, the industry it's in. Look for potential red flags. And if there's no information to be had about them, then just don't put your money in them. Remember to diversify. Don't put all your money in any one stock, let alone a penny stock. It's a terrible idea. You might get lucky, but it's just not a good plan. It's all eggs, one basket. That's the saying for a reason. It's a bad plan. So diversify your investments across different shares and different sectors to spread your risk. Set limits for yourself. Establish stop loss orders to limit potential losses and take profits when appropriate. Don't get too greedy. If you buy into a penny stock and it goes up X% and you're like, I didn't expect that, I don't know why it's happened, that's a hell of a profit, take it or take half, you know? Don't get too greedy because they can reverse. Be cautious. Understand that most penny stocks will fail and it's easy to lose your entire investment. Approach them with due caution and a clear strategy for getting in and out. Stay informed. Keep up with news and developments related to the company and their industry. This has never been easier to do than it is nowadays. So you can quite easily on your phone type in a stock on Google and just add it to a watch list, and your phone will even just notify you if it's gone up or down a noticeable percent. Know when to get out. Some penny stocks can pop only to completely reverse just a few weeks later. So don't push your luck too far and know when to get out. Like I was saying, if you get a crazy profit you weren't expecting, just take the win. Finally, keep them as a small and speculative percentage of your portfolio, i.e. money you could afford to lose in the long run. If you had a healthy portfolio, whether it was growth stocks, dividend stocks, maybe your money's in property, whatever, and you've got 5% of the cash you were looking to invest in penny stocks, it's not the end of the world if it goes badly, and if it goes good, then great. If you've got 50% of your life savings in penny stocks, I don't know how you're going to sleep at night if it goes badly, you know? In summary, while penny stocks are low price shares that can offer the potential for very high returns, they should be approached with a healthy dose of caution and careful research. Investing in penny stocks is speculative and may not be suitable for all investors, especially those with a low risk tolerance or people getting close to retirement. So, can you get rich from buying penny stocks? Well, the answer is yes, potentially. You have to do your research, be willing to wait for that stock to eventually take off, and also understand that most of these stocks will probably never go anywhere. Also, don't ever invest any money in penny stocks that you can't afford to lose, or at least leave sat there for a good while. In the long run, penny stocks can be a great thing, or it could be a waste of money. Really depends on the individual stock, how carefully you've done your research, and how long you're willing to wait. If you found this video helpful, don't forget to subscribe, ring that notification bell for more financial insights. Until next time, keep learning, keep growing, keep investing in your financial future. Cheers.